This is part 2 of a trading system for a trading system. In review, last time we talked about how we had a plot of our equity curve going back to beginning of 2015, and then we tried to pick turning points in this equity curve to buy the dips and sell the rallies, buy the dips and sell the rallies, and this is one of the ones that we took a look at. But I want to have a correction for this because this doesn't accurately benchmark trading it every day. It shows when you start and it shows when you finish, and it says you only had 113 trades. And so what we were comparing it to was different, and I want to show you that real quick for a review. So here's the Easy Language code. We are buying this bar in the close, selling the next bar at the market. It is a close-only data of our combined equity curves for our daily trading systems P&L. Each trading system includes slippage and commission, and when we click on this, we see what this looks like trading it each day. We have our portfolio calculator, but we don't have daily trade statistics. What would this look like if you treated each trading day like a day? Each day was considered a trade. We're benchmarking the performance, showing the daily results as a trade. Now, there are multiple trades within that day in that portfolio that vary, but we're simply looking at the day as a trade. And so these are the results we get from 2015. The worst case drawdown matches, and we buy on the close, sell on the close, or we're buying the next bar at the market, then we're exiting. So we just get a benchmark effect, and you see that here at 1,931 trades, $1,045 average day. Here is the equity curve. It has its ups and downs. It's not perfect. These drawdowns are steeper than they look. About $30,000 is the worst case drawdown in this hypothetical back test. And I want to also show you what we looked at, one of the top strategies that we looked at. We wanted to time this, so what we did is we came in here and we said, let's take a look. We scrolled down and we took a look and we said, okay, if the fast K stochastic crosses below UC, which is 80, which is still a high level, and the close of data 3 is less than or equal to 0.5, meaning the percentage winning days, the last 12 days, is less than 50%, then we buy this bar on the close. And then if fast K crosses above LC, then above 99, then sell this bar on close. And so this is what we did, and we had this nice performance, nicer looking equity curve, but doesn't benchmark it the same way. To accurately benchmark it, we have to start here and buy this, and then buy and sell on this bar, buy and sell on this bar, and then stop. And then here, buy and then sell on this bar, buy and sell on each bar between the entries and exit to accurately benchmark it the same way. And so I want to show you this. See this profit factor 26? That's crazy. Percentage profitable days. Trades is 91%, but that's not how many profitable days there are. And you could see that in the original setup. There's only 45% of the profitable days. So I want to make sure that this is done more accurately. So you kind of have to create this loop. And so here is the updated code. Kind of the same thing. If let's see, if fast K crosses below UC and close, then buy this bar on close. And then if the same condition occurs, then X vol is equal to 1. It's kind of a loop. And then if fast K crosses above LC, then X vol equals 0. And then if X vol equals 1, then sell next bar at the market. And so this may not be 100% accurate, trying to make sure that it is, because I'm still a work in progress, but it buys and sells on each day with a starting and stopping point, and it's more accurately benchmarked. And you can see here about the same net profit. The net profit as a percentage of drawdown goes down about half as much as our original strategy. You have 932 trading days instead of about 114. Your percentage of profitable days is 46% instead of 45%. And so this benchmarks it more This benchmarks it more consistently and more accurately to what we were doing. Not as much of a straight line equity curve. You see how it starts? This is just one day. And then it starts here and it trades every day and then it stops. And it starts here, trades every day, and then it stops. So you have to create a loop. You have to say start here, buy and sell each day until your exit condition occurs. Then you stop. Then when your entry condition occurs, you buy and sell each day until you stop. And so that's the way you accurately benchmark that. I also want to show you that on the Dow Daily. And if you want to benchmark this the way you would a long-term investment, say you had the Dow Jones and you purchased it 100 years ago and you just bought and held. You're not buying and selling it every day, but if you want to see what it feels like if you treat each day like a trade and compare it to trading system statistics, this is what it looks like. So buy and hold the Dow each day, and then accelerates. You know, as time moves forward, index values go up, and the percentage drawdowns are about the same, but they look bigger on a point value because you're dealing with higher point values. So this is a long-term buy and hold investment in the Dow Jones, buying and selling for the last 100 years, 8/21/1922 through 8/19/2022. So a 100-year investment. I'll probably make another video for this. And so this doesn't include dividend reinvestment. This is just a price-based buy and hold statistics. What it would feel like on a daily basis if you bought and held. These are statistics. 52% of the days are profitable. So let's look at it on an annual basis, periodical analysis, annual. And so some years, you see more profitability. 60% in 2019, that was a high year. You could do this with the S&P, you could do this with any index or any market value. And so just wanted to share with you the daily effects of the Dow, daily effects of our stock index portfolio trading system. And then if you wanted to use a timing mechanism to get in, you would have to do more of this version to compare it to the daily results than you would this version. And so I wanted to make that clear. This is part 2 of a trading system for your trading system. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.